You think you know about taxes. They're owed and you pay them, right? But why do we pay them and how did we get here? It turns out it's been a wild ride to get to this point. Welcome back to Fanatics. We're dedicated to bringing you the most fascinating and downright unbelievable real-life incidents that stun the world. Today, we're going to do a deep dive on the history of paying income tax in America. From its humble beginnings as a colonial territory to the present, tax regulation has always been a hot issue in the nation and is changing every year. Let's get into it. At the beginning of its life as a British colony, the United States was actually income tax free. With no official federal government to oversee and implement taxes on income, residents instead had to pay taxes to the British government, which was in control of the nation at the time. These included things like real estate taxes and tea taxes, which ended up leading to the infamous Boston Tea Party. While plenty of goods were taxed, income was not, meaning residents were able to retain 100% of their earnings. After the Revolutionary War, the newly formed American Congress had an ambitious nation-building to-do list all under the canopy of federalism, under which the states and federal government are granted shared and exclusive powers. And the first Congress's agendas were ambitious: establish justice, ensure domestic tranquility, provide for the common defense, promote the general welfare, the list goes on, and to nobody's surprise, American taxation was born along with the new nation. What is surprising is that despite the new nation's massive domestic and international agenda, there was no federal Department of Taxation. Instead, taxes were to be collected by the individual states before being passed on to the federal government. Most of the early taxes in the country mimicked those imposed by England and were placed on specific goods and services, and early Americans continued to be unburdened with a tax on their income. What would it take for the federal government to impose an income tax? A civil war, literally. The first American income tax, which was instituted in 1861, a time when the country was still reeling from the bloody and devastating American Civil War. The Civil War, which cost the young nation billions, $3.3 billion by both governments fighting the war, $2.2 billion in human capital lost due to deaths, and physical destruction just under $1.5 billion. It's no surprise then that the first version of the IRS was created at this time too, so enforcement efforts could fund rebuilding the nation. This first version of the income tax ended up being repealed in 1872 after the U.S. had arrived in the industrial age, but was eventually brought back and codified into the U.S. Constitution in 1909. And by 1913, upon its ratification, income tax was back for good. In 1913, the first full year of life in the U.S. under the newly reintroduced income tax, less than 1% of America's population paid the tax, and those that did paid a mere 1% of their net income. That would not last for very long. Once the federal government saw just how far the funds collected from the tax could go, increases began and they didn't stop. In the nearly 110 years since its introduction, income tax rates have been increased and decreased depending on who was in power at the time. At one point in 1944, the highest tax rate for the wealthiest people was a whopping 94% of net income. As of 2022, the average income tax rate in the U.S. sits at 37%, and about 150 million tax returns are filed yearly. With tax rates increasing, you can imagine legal debate has raged over what exactly constitutes income for an American. In 1920, in the watershed case of Eisner versus Macomber, the U.S. tax system turned a corner and never looked back when the court ruled that taxation on stock dividends was valid. This watershed case started a wave of further regulations stating taxes on all types of income earnings is valid. After the stock market crash of 1927 and at the end of the Great Depression, marginal tax rates began a slow descent back downwards, to the relief of many Americans. However, as tax brackets have continued to fluctuate, the tax codes have become a breeding ground for drastic inequality. Now there are various loopholes allowing large corporations and the wealthiest 1% of earners to evade a large share of what they owe, leaving the true burden of the nation's taxes at the feet of the middle and lower middle class. The lower class is now able to evade taxes altogether, but must depend on government subsidies for basic necessities, like food and shelter in some cases. Against the backdrop of ever-growing and increasingly complex income tax regulation, not surprisingly, each state has chartered its own tax policy course. Although most U.S. states charge some form of income tax, 7 states, Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming, don't collect any state income tax at all, and 2, New Hampshire and Tennessee, tax interest and dividend income but not wages and salaries. Choosing a totally new path for American tax policy, 9 U.S. states opted for a flat income tax rate that applies to all residents regardless of income. That means residents with low incomes and high incomes all pay taxes at the same rate in Colorado, Illinois, Indiana, Kentucky, Massachusetts, Michigan, North Carolina, Pennsylvania, and Utah. Flat tax proponents point to the fact that many people choose to move to these states because of predictable and low tax rates, while flat tax opponents argue that the wealthy are the only ones to benefit in a flat tax system. In any event, 9 states are choosing to highlight how the U.S. could do tax policy differently. Going their own way, New Hampshire and Washington don't impose income tax but impose a flat rate for other tax situations. No matter what your personal opinion about which variation on the tax theme best tackles economic inequality while maintaining stable national economic health, the U.S. government has been unwilling to move the needle and implement a change from the multi-level, progressively rated codes that have been in effect since their inception. Taxes may be inevitable in this world, but the merit and success of the regulations surrounding them are certainly up for both debate and wise government officials to decide upon and invoke. While the future of the U.S.'s economic survival is uncertain, one thing is, income tax has a long history and plenty of data to study, and the codes can certainly be improved upon. Thanks for watching. If you liked this video and want more content just like it, please help us to continue providing similar stories by liking and subscribing to our channel. Until next time.